My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today we got a special guest zooming in from Boston, Massachusetts, Chris Lento, very experienced real estate investor. He's been through a lot of cycles. He's been in the game for 25 years, the last 8 years at the helm of EM Capital. And these days, Chris and the gang focus on multifamily properties. He's a syndicator, and that's what we're going to discuss here today. So Chris, welcome to the show. Great to have you.
Yeah, I'm glad to be here, Dave.
So give us a little snapshot of what the portfolio currently looks like. It's been kind of tumultuous, rocky times for the last few years in the multifamily space. What do you guys have right now in the portfolio?
Yeah, so we have 850 units across 8 properties. So number of small properties that I got kind of 7 or so years ago when I was just transitioning into this as a full-time career, and not just sort of running my own portfolio. And then some larger ones. So we closed a deal in Atlanta in early March. That was 268 units. That was our biggest acquisition to date.
Yeah,
that was a good one. Just fun raising capital for a big deal like that through an election and interest rate cycles, and so that was a whole. We could talk for an hour about that.
Yeah.
So it's a mix of from 24 units up to 268 unit multifamilies. Couple of mid rises.
Okay.
So, like 6 stories, elevator buildings.
Okay.
And then the rest of them garden style, southeastern US, kind of spread out multifamilies. And then right now I'm closing next week on a 42 unit property in a very, very nice residential neighborhood in Raleigh that we're going to convert to condos. So a little different, but it sort of fell in our lap. Yeah, kind of fell in our lap as part of a searching for the multifamilies and just the neighborhood and just the uniqueness of the property. We're like, hey, we can do this. So a little different, but other than that, primarily solely focused on multifamily.
So what does your buy box look like, Chris?
So right now it's 12 to 50 million, 1985 or newer. North Carolina, South Carolina, Atlanta, and Northern Florida, within a major metro area, not more than, an hour from, and that's a stretch from like a significant metro area. Multifamily. Yeah, that's pretty much it. I don't go by the, units because I feel like the dollar range kind of captures the units.
Yeah, depending on the market for sure.
Right.
So we were talking a little bit off camera about what you guys do a little bit differently, what your secret sauce is. And it was kind of interesting. If I recall correctly, you're talking about, it's understanding every component of the deal, every component of the property. And even though you might not be doing everything, making sure that you completely understand what's going on and who's doing what at all times. So let's maybe unwrap that a little bit, if you would.
Yeah, sure. But I think part of it, I was an engineer in aerospace for 15 years.
Okay.
Doing real estate on the side.
Details guy. Good with the numbers. Checklists. Yeah.
I like to understand how things work, not just rely on someone else to handle it. And I think it's a balance of, knowing who the right people are to do the job, right? Like I'm not writing the legal documents. I'm not managing the property day to day. But I've found that, you need to know what they're doing, or, the lawyer's just kind of drafting what you want into a form that's enforceable and protecting your risks, right? So I'm more likely to summarize, and now that we have, AI, throw it into ChatGPT and be like, it should look something like that. Because I understand the project and I know what we want to get out of it. And you can wrap any kind of protections around it you want, and that's what your job is. But I'm not just fully outsourcing, like, send it out and expect it to come back in a month. Like, okay, sounds good. Right. On the property management side, I want to know how they're collecting their leases, what kind of follow-ups they're doing, One, because it keeps them on their toes and it gives me insight into, what their actual capability is, how sophisticated they are they using the latest tools? And two, it helps me understand, since I have a number of properties, what their processes are, because then when I go to talk to a different property manager, I now am smarter on it, and I can say, hey, they're using this, and I can kind of aggregate best practices across, while not really being the one that implements any of those things. So sort of like a connector. I'm very good at grasping a lot of concepts, not that interested in, diving into any one specific.
But you want to get it. You want to understand and big picture what they're doing. And then that really probably helps you along with your other properties as well, because if you see one property management company doing something really, really smart, then you can teach your other guys what you want them to be doing.
Absolutely. Or going down the wrong path. Like, hey, we have this great software we're going to implement. Like, hey, we did that over here. Here's why I think you should reconsider. And I think also, in these deals, as a real estate investor, you're the focal point of all the aspects. You have a lot of experts who generally get paid by the hour or get paid by a fee, or
doesn't really matter how it turns out to them. They're going to get paid.
I mean, they have a reputation and they would like to be involved in successful deals because that's more fun. But they're getting paid. So you're the one who is really connecting all the dots and has to figure out like where the lawyer's expertise ends and the CPA's expertise begins. And maybe they don't really touch, right? Like you might have to fill the gap in there. So I think, truly understanding.
And they're kind of loath to say they don't have expertise in everything, right? So, I mean, that's part of the challenge.
They're not going to tell you that.
Exactly. Yeah.
So you gotta figure that out. And, where are the gaps that you need to be in? Like, all right, let's have a meeting with the three of us and iron this out. So I think it's just an important role. And I, as someone who likes to control the situation, have to balance that against, let the people that know what they're doing do their piece.
Yeah. No, that makes a lot of sense. So, Chris, it sounds like things are going really well for you guys with the acquisitions. Raising capital has got to be a big part of that. We were also talking a little bit off camera that, no, actually, no, I think you brought down that biggest deal right in the middle of an election, right in the middle of all that turmoil. So, tell me a little bit about your process for connecting with LPs and raising capital for your deals, because it sounds like you're doing a really good job with that.
Yeah, so I would say I have two answers to that question. One is, how do I raise personally for my deals, like with my investor network? And then the other is, how do I partner with people who co-GPs? So a lot of my deals are with two separate companies, and we co-GP together. We've done 5 deals together, and kind of each group has their sweet spot. So within my network, I've kind of spiraled outwards from friends and family to friends of friends to, you sort of like kind of go down these rabbit holes of people that like the deals, and now you're into these different groups. I do podcasts, I post on LinkedIn, I do a lot of active LinkedIn outreach to try to get calls.
Right.
And that's going well. I wouldn't say it's, like 50% per year growth in active investors. It's like 15. So it's growing. But it's not like it's just not where I want to spend my time.
Right.
I'm not like a capital raiser, kind of not like a BSer. I don't know. So I've partnered with a number of people that are just really good capital raisers. And their success has really been finding their target market of people that they resonate with. They used to be physicians, and they can just get in that world and they've done a great job. Yep. Yeah, exactly. Yeah. So, I think recognizing where your strong suits are, and then partnering with people that fill in the gaps has been, success for me there.
So I've heard from a few syndicators pros and cons to working with co-GPs to raise capital for the deal. So what are your thoughts on that? Obviously you like it because you're connecting with somebody who's perhaps a little bit better or well connected in the capital raising space than you are, so you don't have to worry about it so much. What are some of the not so great sides about working with co-GPs?
Well, so I think there's a couple different ways you can work with co-GPs, right? There's a way you can do it where they're kind of capital raisers for you, and they just are co-GPs because that's how you set the documentation up.
Yeah.
I don't love that because they don't really have skin in the game. They don't really tend to understand the project that well.
And it's a little bit of a gray area too, right?
It is. It is. I
Yeah.
think if you set it up correctly, it's pretty
Pretty
solid.
solid. Okay. Yeah.
Um, but yeah, you're kind of trusting that they're following all the rules correctly,
Yeah.
and that they're not kind of maybe going into the outside of that gray area without you
Hmm.
understanding it, or
Hmm.
aware that it could drag you into a legal situation. So I stay away from that. So my co-GPs are really truly co-GPs. Like, I sort of lead the majority of the asset management, but they're involved in asset
Got it.
management. They tend to do a majority of the capital raising, but I'm also capital raising. So
Hmm.
it's really a multi-company partnership where we're sort
Okay.
of leveraging each other's strengths, not so much like approaching a capital raiser.
Right. Got it. So that's brings me back to another question I had from earlier. What's your kind of philosophy when it comes to multifamily real estate investing? Are you a, you know, value add guy and you want to turn around and sell the property in 3 to 5 years? Are you a long-term hold guy that you just want to optimize that property and maximize the cash flow and hold on to it in long into the future? Where do you kind of land in there, Chris?
Well, I mean, I think fundamentally, I'd love to be a long-term hold guy who just, optimizes the property and has this great cash flow. But that's a really hard way to make a living.
Hmm.
It's a good way to keep generational wealth. It's a good way to grow or be a safe way to grow a piece of your portfolio, in a larger portfolio. But whereas this is my full-time job, that's a
Yeah.
tough way to make a living.
Yeah,
So
it's hard to make that cash flow pay all the bills all the time kind of thing. Yeah.
correct, right. And it takes a long time. You got to kind of build it up, and
Yeah.
then a lot of times, it's hard to find investors who want to be with you for like an indefinite hold period, right?
Yeah.
like there's some properties that just it makes the most sense to do like a 15-year hold and refinance it three times along the way.
Yeah.
But finding people that can think that far ahead and want to be involved in something like that is not as easy as finding someone who can see a 5-year time horizon. Like, okay, in 5 years, my kids will be going off to college. That I get it.
Yeah.
Whereas like they're like in 15 years, I'll be
Well, I could be
65.
around for quite a
Yeah,
long. Yeah.
right, right.
Yeah.
Um, so so right now, I like to look for value add, and I also like the fact that it is a definitive way that you can drive NOI up, and you're not
Mhm.
relying on market rents increasing or cap rate compression or all these things that you really don't know what's going to
Yeah.
happen. But if you can find something that, hey, this property needs to be fixed up, it's very clear. Needs all new roofs. It needs interior renovations. It's a pretty easy story to tell. That's a true story. Like, hey, we're going to
Yeah.
take a rundown property and we're going to make it nice. And in that process,
And then we're going to
we're going to
increase the
increase the
rents.
rents. We're going to
Yeah.
make it a safer community. It's a more tangible way to do it. But we have two deals that were just good properties. We got a good price on them. They have extremely low bad debt, almost no evictions, high occupancy, and it's just like they're just doing great. So,
Yeah.
I mean, if you can find those all day, right?
Exactly. Exactly. So where do you see the company going over the next 12 to 18 months? What are your goals for EM Capital?
Yeah, so we're looking. So we just closed this $49 million deal. We're looking to do, and then we have this other one closing next month, which is a smaller deal. It's an $11 million all in, the condo conversion deal, as we mentioned
Hmm.
uh, before the show started. I would like to do two more deals in 2025,
Nice.
in the 20 to $50 million range. So that would be the
Yeah.
goal. Hopefully we can close that last one with a good buffer before the holidays. So I don't, I've closed a number of deals
Yeah.
like on the
Have a
end of
have an even
December.
merrier Christmas.
It's brutal. Yeah. So
Yeah.
that's,
Yeah.
yeah. So two more deals this year, another 60 million
Excellent.
in
Well,
acquisitions.
that
That's the
sounds
goal.
like a fantastic. And that, yeah. Do you have kind of like a goal at the end of the day of what you want your door count to be or property count to be, or how do you measure things for your business?
I usually think about it as assets under management
Yeah.
because doors vary by market.
Exactly.
I'm in Boston. I don't own anything in Boston, but doors in Boston are significantly more expensive than doors in Tallahassee. So
Mm.
it's kind of a very abstract number. So
Yeah.
yeah, assets under management is what I what I target, and we have 140 right now,
Mm-hmm.
and I'd like to get to yeah 220 by the end of the year.
Nice. Sounds like a great goal. So, Chris, I'm sure there's a lot of people watching this who'd like to connect with you. If there's like one place where you'd send somebody where you prefer to connect with folks, would that be a website or LinkedIn? How do you prefer to connect with
I
them?
think LinkedIn. I mean, if you want to know about me, my website, which is emcapitalgroup.com, has the podcasts I've been on, has my portfolio, has my contact information. But LinkedIn is where I'm actually active, and I'll respond. We can set up a call or video chat. That's where I'm most responsive.
And you're probably the only Chris Lento in Boston, Massachusetts, I'm guessing, who's doing real estate syndication.
Yes, that's true.
That's how you're easy to find.
Yeah.
Awesome, Chris. Well, hey, good job. Thanks for being on the show. I appreciate your insights.
Yeah, thanks.
All right, everybody, take care, and we'll see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.